Good afternoon. This is Larry Tentarelli with your Daily 5 for StockCharts.com. Today is March 1st, and we're going to get started. We're going to take a look at 5 key charts that are on my screen today and that I wanted to share with you. So we'll get started with my introduction. My name is Larry Tentarelli. I am the founder of BlueChipDaily.com. You can also find me on Twitter with my call signal at LMT978. So we're going to start today. I've got 5 diversified charts in 5 different sectors that I wanted to bring to your interest. So we're going to start with a lower volatility idea. And today I've got a mix of some more active charts and some lower volatility charts. So we're going to start with Bristol Myers in the healthcare sector. And obviously we can see by looking at the chart, it's in a very nice, consistent uptrend. And a couple things about the chart that are working. So first of all, as we know, the S&P 500 is down year to date. But if we take a look at the Bristol Myers chart, we can see that Bristol Myers is up nicely for the year. It's trading in an uptrend very close to a breakout level. It's trading over 4 rising moving averages, and I especially like that it's holding over this rising 50-day moving average. It's got a lower than average valuation. The forward PE is under 10. It yields 2.92%. And what we've seen in this market, especially since the Federal Reserve switched to a tightening bias at the end of November, is the market has started to move into, or has continued to move, I should say, into lower valuation stocks that also have higher dividends. So if we take a look on the chart, so November 30th, this was the day that the FOMC came out and they said that they're going to move to a tightening bias. And as we can see from November 30th, Bristol Myers has been pretty much straight up. So for whatever reason, as the Fed shifted gears to a tightening bias, the market has moved into BMY. And I think part of it is the lower PE, the higher dividend. And as we can see, overall set up very well on the chart. And over this 50-day moving average keeps this entire trend intact, but a very nice, clean technical uptrend in Bristol Myers. For chart number 2, we're going to move into the energy sector, and this is a sector that I've covered quite a lot for StockCharts.com over the past year or so. So Chevron right now is a little bit extended past an ideal buy point. So I covered Chevron before when it was down in this consolidation range. So at this point, this would not be the ideal buy point for me for a new entry. So I do have a position in Chevron. It's been one of my top performers year to date. And we can see also, this is another stock. A couple things it shares with Bristol Myers. Very, very strong. So it's positive year to date versus a market that's down. It's been holding over this rising 50-day moving average, really going all the way back to September of last year, over 4 rising moving averages, lower than average PE, higher than average dividend. So the same combination for the most part as Bristol Myers. But at this point, what if I was looking for a new entry, I would actually wait for some type of a pullback because crude oil's had a very strong move. The energy stocks have had a very strong move. We can see a lot of volume coming into Chevron. And I'm holding my position here, but for a new position, I think I'd look for some type of a possible pullback that might offer a higher percentage opportunity. So for chart number 3, we're going to move to the opposite side of the scale. So we've just taken a look at 2 lower volatility, lower valuation, high dividend stocks in uptrends. And we're going to move into the technology sector, and we're going to take a look at Datadog in the cloud industry. So there's a couple things about the Datadog chart that I want to highlight. So the first thing is year to date, it's been a little more volatile with the sector, but if we take a look at the chart, it spent not too long. It looks like maybe about a week or so trading underneath the 200-day moving average. Now, if you dial up your chart for the S&P 500 or the NASDAQ 100, you'll see that they've spent a lot longer underneath that 200-day. So Datadog had a brief test under the 200-day. It had a sharp recovery higher. But if we take a look at where it is on the chart right now, so recent bullish 20, 50-day moving average cross to the upside. So this is constructive. And if we take a look at the 20, 50-day in Datadog, we can see the last time it crossed to the upside was the beginning of June. The stock went on a pretty strong run. And then when it crossed to the downside in December, tech got weaker, and then Datadog had a pretty sharp drawdown. But from there, it's been improving. Right now, it's trading over all 4 moving averages. The 20-day is moving higher. The 50-day looks like it's trying to flatten out. So the technology sector overall, I would consider this a higher volatility sector, but Datadog, of all the charts in that sector, is one of the better charts on my screen. And this bullish 20, 50-day cross to the upside, that's notable. And also we can see the stock's been acting well on a weaker day in the market today. So we're going to move down to chart number 4. So this is the MSCI Global Metals and Mining Producers. So the last time I was on your daily 5, I highlighted Vale, which is in the Global Metals and Mining Group. So PIC is the ETF that covers the entire sector. So there's a lot of things that we're going to focus on here. So the first thing is, obviously, is the uptrend on the chart. So we can see rising 20-day, rising 50-day, slightly rising 200-day moving average, and then the 100-day is also turning higher. So over 4 rising moving averages. Couple things year to date. So 2022, while the S&P 500 is down for the year, we can see that the PIC ETF has been trending higher. Also, if we go back to November 30th, when the Federal Reserve announced that they were going to tighten their bias, this group has been strongly higher. So that there could be a lot of reasons or a lot of fundamental reasons as far as why it's moved higher. And I don't get too much into the fundamentals. I tend to stay much more focused on the charts, but we can see a couple things that are working. So breaking out right now, 48 and change, looks like that's going to take the chart to about a 10-month high. So it's breaking out over the top of a lot of resistance, making new close to new highs here. And what's in the ETF? It's got a big position in Vale, which we spoke about before. Also, BHP is a major position. Rio Tinto, Freeport-McMoRan is also a bigger position. So this is going to be really focused on general mining. So they're not just locked into gold or locked into one sector. They cover primarily the global mining complex, and very, very nice uptrend right where it is. And then we're going to go to chart number 5. And as we continue through the sector, so Wells Fargo. And the reason that I wanted to highlight this chart today, so this chart is a little bit different than the 4 others that we took a look at, because the 4 others that we just took a look at are basically trending higher, up on the day, set up well. So Wells Fargo, the reason that we're going to take a look here, this is actually a pullback idea chart. So Wells Fargo down 4% on the day so far, and we can see it's pulled back almost 20% from the highs. Now, part of the reason, or a lot of the reason for the volatility in Wells Fargo and the banks and financials today is that bond yields have come down considerably. The last I looked on the screen, bond yields were trading just under 180. So a couple things are at play there. Bond yields could be pulling back because the bond market has now moved from pricing a 50 basis point rate hike on the March 16th meeting. The bond market's now pricing in a 25 basis point rate hike. So what's happened is yields have come down with those lower rate hike expectations. And as a result, as the yields come down, the financial sector is the most correlated to bond yields. And then also there could be a slight flight to safety with the geopolitical concerns that are happening over in the Ukraine right now. But by looking at the chart, I do expect longer term the Fed is going to move into their hiking cycle, which should eventually push interest rates higher, and the banks will be a direct beneficiary. So just by taking a look at the chart now on this pullback, so 51 and change, if we take a look at, let's call it 48 to 50 on the chart, then we can see that Wells Fargo right now is coming down into a pretty wide support base. So I generally don't take new positions when stocks are down 4% on the day. We're in this type of a pullback. But what I do want to do is have this very high on my watch list. And if I start to see any stability and then a move higher, I would move that up further. But this is one that I would wait until the sellers get cleared out and then look for a move higher. So that's it for your Daily 5 for today. I hope that you've enjoyed the presentation, and I hope that you have a great afternoon. Thank you.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.